Hello, Warriors. How's everyone doing? Alexander, Simon, I'm okay. I hope the people in the Bay are okay. Hi, Brand.
Whoa, whoa,
Richard.
whoa, whoa, whoa. What happened in the Bay? I'm sorry. I'm just
Oh,
catching this right now. What happened?
I guess they had a 5.1
Oh,
earthquake.
oh,
Yeah,
5.1 on the Richter scale. Yeah.
yeah,
Oh, wow.
yeah.
Okay.
5.1, we don't even wake up in a
Who said that? I,
Can you hear Steve there? Could you hear him?
Yeah.
oh, yeah. Okay. Yeah, I did hear him.
Yeah, I wasn't sure if the sound was good enough where you guys could hear him. Steve happens to be sitting next to me for those of you that want to say hello.
Hey, Steve, have you slept yet?
Hey Dale, I think I've slept something like 8 hours during the past 3.5 days.
Okay. You're a very unique guy. All right, Ryan, I have a question for you. It's great to have Blake and Steve there. And God, isn't it great to be able to insult each other in person
It is
instead
awesome.
huh?
It is very awesome to be able to look at Steve in the eye and say, you know what? Shut up, Steve.
Anyway, I know you
it's,
guys are going to have a great time.
we're having a great time. I'm going to let you guys continue on. Sorry,
right.
I just had to ask about San Francisco.
Yeah, okay. Ryan, I have a question for you. How many interventions would you say the BOJ did? How many?
What, since September or just in this last few days?
No, yeah, since September, since the first time.
I would say 2 definite, possibly 3.
3. Huh? What about that number? Even interventions take 3 to work. All right, so it was 3 interventions to a top in the yen. Anyway, that's a new one for me. Nice hold on Aussie, Ryan.
Yeah, cheers, mate.
Yeah, when I hear Greg and I'm on the other side, I get nervous too. Anyway, nice hold. S&Ps are interesting. I want to get to Kman, but we did have the breakout over 3,800, and last night they sold it off. Must have been some bad earnings somewhere. So it's real easy now, okay? Back under 3,800, if you're long, you should be gone, all right? We start cracking the 50, and just the measured move is 4,100, and that's exactly where, well, not exactly, but 4,105, 200-day comes in. So
I was saying on the flow show, it still confounds me, the narrative in stocks. I mean, the US hurtling towards a recession, some bad earnings, and stocks rally. It just, someone who's been doing this as long as we have, it just doesn't compute, does it?
That's why I could keep going. Is because most people feared bad earnings, so they're on the sidelines, being left in the dust. And everyone's saying, I remember I said it was contrarian to be calling for a rally here, and Kman correctly pointed out there were many people calling for a bounce or a relief rally. So the contrarian stance to that is it's more than that. And dollar breakdown under 110, took out the 50-day. Is it going to hold and rally here? I don't know, but it kind of makes 104 viable. So just, from here to here, and then just subtract it, 105, 106. 104 is like, I think a huge number based on that's really where it accelerated. And I think it was Rohit's chart. See, as a horizontal line at 104, kind of like the line of death for the dollar that it has to hold. So maybe we're going to go down there and check it out.
Morning, Dale. Morning, everybody.
Hey, Stella.
Hello.
You're an Iron Man.
I have a comment on all this. So, 20, 30 years ago, right? What used to happen? You get a recession, things are bad, companies fail, and spending gets cut, people lose their jobs. and then we get back to a situation where suddenly, we get more growth, more jobs needed, and you get the cycle.
Yeah,
This is now, this is completely different. That's why we're seeing this different scenario and different reaction in stocks, because back then, 20, 30 years ago, it wasn't that, we're getting a recession.
Planning.
We're going, a recession, which means zero rates and QE. No. But this is what the reality is of the last 10, 15 years. So the markets are saying recession, yes, but the central banks are going to come to our rescue and just flood them, flood with money. And I must admit, I don't disagree. It's wrong, but I think that's what the reaction is going to be once more. That's why the risk gets bid, even as Meta and Google or whoever was reporting yesterday. They reported really bad numbers, and everything in the US and everywhere else, all the leading indicators, they're changing. They're going south. And theoretically, the correct reaction is to sell, right? Because this is bad times coming. But no, the new normal means central banks are going to intervene again. And, next time is going to be even worse.
So far, all they've had to do is leak an article. Okay, so far, all they've had to do is leak a Wall Street Journal article.
Yep.
But do you think QE is going to come again? Surely, like you're saying, 20, 30 years ago, you have these cycles, growth up, growth down. You can't be using QE for every normal cycle. QE is supposed to be an emergency tool, and they pulled it out for the COVID when they probably didn't really need to, because it wasn't a financial crisis, it was a health crisis. Surely we're not going to get QE just for every little downturn in the economy. And so isn't the market wrong?
You're absolutely right, but I think central banks are still going to do it. The logic says they shouldn't, but I think they're going to do it.
Island bottom TLT, kind of an unusual. You don't get islands in currencies because they trade all week except Sunday. But TLT opens, it closes, and you have a nice little gap on the way down. And gapped up yesterday.
Somebody has something on the background.
Steve. Go ahead, imitate him.
Yes, guys?
You have something that is making a lot of background noise.
Oh, sorry, I was unmuted. I didn't. Yeah. Sorry.
It's okay. It's okay.
It's like
Stelios, you do a better imitation of Steve than he does. So anyway. So that's bonds. I don't know if I, be short right now. This was a historical move, as Jim Welch pointed out. Historical move. I don't know how many weeks in a row they were down. 13 or something. It hasn't happened, he said, I don't know, since 1700 or something. But maybe we get a rally. What could happen later on, guys, is we could get lower rates. And because of the fundamentals that Ryan's talking about, there may be a time where lower rates are going lower because of a recession, and that stocks won't respond to lower rates in that scenario. I think it's way down the road, but it could be, it could be something that happens. Everyone say, well, just like, rates were going up for a while and the market kept going, and maybe rates come down and, it doesn't help the market that much because it's more of a recession deal.
I personally think unless there's World War III involving nuclear weapons, equities are going to respond to lower rates and they're going to rally. Okay. Unless there's obviously something huge happening, which I hope doesn't, because then it makes our portfolios completely irrelevant.
Yeah, and I know, it's kind of in everyone's mind now, the unthinkable. Maybe a scaled down version of the unthinkable, but seems like, it could happen. And that makes me wonder. You could have great positions on. Technically and risk management, you're doing all you can, and then if there's an event like that, I don't know, where's your risk control on the use of a dirty bomb or something like that goes off in Ukraine? We'll see. I never thought, Ukraine doing well was really going to be the catalyst for him getting desperate enough. But he's desperate. I hear he's bringing in fighters from Afghanistan to help now. So
he's flogging the false flag stuff as well today, saying that.
Again today.
Yeah, he was out just before the F.A.C.E started, saying that they are aware of Ukraine's plan to use a dirty bomb.
Yeah, they're aware of it. Okay.
Yeah.
All right.
It's a
So
risk.
yeah. So gold's acting okay. I mean, it's not a bad chart.
We still have the
I think,
double bottom playing out, but
someone saying ABC. I think Welsh did at the summit. So this is 4. We finished 3, and this is 4 with A, B, C, and he was saying 1740. I believe I'm losing my capability of remembering everyone's trades, but I think 1740, and then one more flush, and then a pretty good rally. So that's going to be a pretty big test. 1740.
It's playing nicely with the tech. It's playing nicely with the tech. It's run right into that 1675-85 zone, and pretty much on the nail, and it's resisted already.
Yeah.
Dale, did you just say you're losing the ability to remember everybody's trades?
Yeah.
Well, at least you remember that you used to remember everybody's trades. So that's a good thing, because if you didn't recognize that, then I'd be really worried about you. How about that?
Okay. So, all right. So Euro, even though it's been lagging cable, does I can't short a chart like that. Almost looks like a breakout.
I shorted Euro last night when it was at 99.65, because I was playing it on the long side the whole way. Yeah. Okay. And then I turned around yesterday and played it last night on the short side, and then I did get stopped out overnight above parity. So I wasn't sure if it was going to be able to break out or not. I was, because it's one of those things where you think that you're like, okay, I knew we were going to be up here ahead of the Fed. I wasn't sure we were going to be up there ahead of the ECB, but with the ECB tomorrow, it's a big deal. Where we're at after, at the end of this week, ahead of the Fed, going into next week. Do you guys have any expectations of what do you think the ECB is going to do? I mean, the ECB is slated to raise rates by three quarters of a percent, but how hawkish are they going to be? What are your thoughts? And we haven't heard from Kman, have we?
Yeah, but by the way, before Kman, I just want to acknowledge, Blake, that Monday when you were here, and you were talking about selling the dollar.
Yeah.
And I said, what levels? And you said right here. Nice
call. I
right
thank
there,
you. I was
So I still remember yours, man.
Hey, as long as you remember mine, that's all that matters to me. Really. No, but but no, I was short dollars quite aggressively going into yesterday, and I closed everything out yesterday afternoon. Nice. I did try to short some euro, but I wasn't really confident. That's why I was telling everybody yesterday in our private morning edge and the daily roundup. I'm like, look, I'm going to short some euro, but my stops are above parity, and it's a small position. If I get stopped out, it's no big deal. I just knew that ahead of the ECB, it's something that I'd be willing to take a shot at, especially when you have a bunch of good trades, all work out, and then you're like, okay, I don't mind, because the risk reward's there. I don't mind taking a shot. That's how I approached it. So anyway, but let's hear from Kman. Kman, what do you think about the ECB?
Well, I think 75 is baked in, and then it depends, as you say, on how hawkish or dovish Lagarde will be, especially over the press conference, because so far, whatever ECB could have thrown at it, and the hawks coming out every time the press conference ended, Lagarde managed to put it lower. But this time, I'm for me, the kicker is what they say on the APP, so on the QE or QT. So the market expectations were for it to start somewhere end of Q1, but if they decide to bring it forward, let's say to the end of this year, that could really give
that would be crazy hawkish.
That could really give the euro a shot in the arm.
Dude, we would be trading if that happened, and my guess would be we'd be trading above 102 by the end of the day tomorrow, because QT is the big question. You know, that's what Kman's pointing out is exactly what the market's going to be listening for tomorrow regarding. So if you guys are taking notes at home and you're like, what's the ECB going to be focused on? Is it going to be, is Lagarde going to actually be hawkish? Forget all that. It's all QT talk. And if they bring that up, that is when you're going to see this massive move in the euro. But continue on, Kman. I just wanted to accentuate that so everybody has a good understanding.
Yeah, so that's going to be the kicker for me. If they stay silent about it, especially Lagarde, I would say, whatever is in the statement can be undone. We have seen that in the past. But if she goes a bit more hawkish herself, so and decides to bring QT forward, that may really give the euro a shot in the arm. If they remain silent or keep everything in place and just do the 75 BPs catch up, I reckon that 99.5 line there, trend line, should be retested, and then we see what happens there into the FOMC, because it's going to, at the end of the day, it's going to be a combination of what's happening for the euro dollar, at least. It's going to be a combination of what's happening at the ECB and then the FOMC. And in the mix, we've got month end. So, and since the equities and the bond markets have been on the move, be careful for end of month, because there could be some nasty flows out of nowhere hitting the market as well.
Yeah, especially when Steve decides to hit the bid, you know, it's going to be out of nowhere. Hey, you know, just for those of you that do not know, Steve is sitting next to me. Him and his family traveled in from Athens, Greece yesterday, and they're staying with our family at our house. And so we're kind of sporadic in the chat rooms the next, you know, few days. But it's nice having Steve visiting in, and he brought in the perfect weather to hear. And I'm sure, Dale, you're dealing with some similar weather over there.
Perfect.
And so we'll hear from Steve in a little bit, but let's talk about the sterling. Ryan, why? I mean, is this just, you know, the market going, oh shit, Sunak is the prime minister? That's good for the cable, because I mean, I thought it was a kind of a delayed reaction, or is this more of just on the heels of dollar weakness?
Yeah, I think it's a bit of both. I think it is a bit of a delayed reaction. I was long over the weekend, Sunday night, cable. Actually gave a bit back on it when it dropped to under 113.
Not nice.
Because no, it wasn't.
I was like trying to give you a compliment, and then I couldn't. Okay, go ahead.
Yeah. Well, I'll take it when they come. But I made a bit on the upside, then gave some back on the downside, and I just felt I thought that was it. There was no follow through to the Sunak coming in.
Right.
But his noises since then, he's going to get a grip on the finances, it seems, and that's going to calm the market. So we've got this reaction. And Kay mentioned it in the flow show this morning. We had such a big overreaction on the downside when we got that blowout, down to the 103s, that it's natural we get a bit of the reverses just as volatile on the other side. Where can this go? This can go to 118, 120. You know what cable's like. You think it might go somewhere and it goes twice as much.
Right.
But yeah, there is positivity in it. But again, you've got to come back to the fundamentals, and the fundamentals are that the economy isn't doing that well, the same as everywhere else. So, get over this bit of noise, get through the Fed, find out where we are, and we're probably going to run right back into the same fundamentals of weak growth. And you don't want to be buying the pound, and we're still going back to playing who's got the least dirty shirt in the world.
So I would just say technically, and I'm drawing out this like support zone. I would, and this is me, thinking out loud. I'm going to be, with Steve's family, taking them to Las Vegas here at the end of the week. So Steve and I are going to be disappearing for a little bit. But if I had to, just give you guys some guidance of what I'm thinking, I'm thinking, I'm going to be buying dips now down to like, 114s, I guess.
Yeah,
this is like, it would be like a support zone for me.
Has everyone finished their milkshake?
What do you mean?
You know what I mean?
Oh, the milkshake theory. Got it.
I guess everyone has finished drinking their milkshake.
Maybe I'm
They're going to wait for lower levels to go back to the soda fountain and ask for another one. But anyway, I love milkshakes.
But technically, I think you're right. If we stay above 114, then we're looking up. If we fail and we get back under 114, this is going to look like one hell of a fake out.
Yeah, that's true. I mean,
and then you're going to get milkshake on the floor.
Well, let's discuss really quick the dollar CAD. We got the I totally spaced it this morning. I was updating a chart about the dollar CAD at the 135 level, and just taking a step back. This was the very bullish breakout above the channel earlier this last month, and we broke out, big breakout. We're coming back towards the breakout point. We do have the BOC today, and I'm sitting there looking at it like, this is 135. I mean, it's pretty critical. Bank of Canada is expected to keep pace with the Fed, raise rates by 75 basis points. What should we be expecting out of the Bank of Canada? Because like I said, I spaced it. I haven't done a lot of research on the BOC today. What are you guys thinking? Do you have any opinions here?
Yeah, I think it's a bit funny because the expectations are somewhere solidly for 75 BPs, but then I've seen some Canadian strategists talking about doing only 50, despite what McClem was pretty hawkish over the tensions that he did this month. But then some say that they might start to talk about pausing as well, and so it's really going. I think it's going to be a mover, but to what side is a big question. And
hey, Kay, you just because you were on the interview with me, going back to our conversations with Brent Donnelly, who happens to lives in Canada. He's in the Toronto area, and we interviewed him on the Trader Summit. He had mentioned something that's rather interesting, and I hadn't thought about a whole lot because, but I know this after he mentioned it because we have so many Canadians that travel here this time of the year. Like if you drive around this time of the year, you look at everybody's license plates. Half of them are Canadian where I live. So and I'm living, the southern United States, but the Canadian real estate market has never really seen they never experienced the GFC like we did, where we had mortgage, the real estate market collapse here. I think that's a real risk and he mentioned it's a real risk for Canada because it's been elevated for so many years. So maybe the Bank of Canada is gonna be getting ahead of what they might be looking at, and maybe they are a little bit more dovish, even though the Fed's
It's exactly the same as what I read on those Canadian bank strategies.
That's interesting.
That they see that Canada is in or will be in a spot of bother, and that data could really quickly catch up as well.
If any of you live in Canada, I would love to hear your opinions on that. But go ahead. Sorry, Kman, continue.
And so it's in line with what Brent was saying, that the situation seems a bit more rosy looking at Canada from the outside than what the Canadians say themselves.
Okay, well,
interesting, right?
Yeah, that's really interesting. But so it's going to be. I would now just saying what you're, just mentioning what you're, or let's expand on what you're saying. If the Bank of Canada today comes in and does raise by 75 basis points, maybe that is a hawkish sign. That's a hawkish sign for the Canadian, or a bullish sign for the Canadian. Maybe you buy the Canadian dollar through the 135 level, looking for it to test maybe as low as 134, maybe 133.
Well, I mean, I have a little really idea on the dollar Canada, but some are saying that if the Bank of Canada do 75, it may be the last one, and then some people are looking to fade those moves.
Okay, well,
I'm just saying what I read. So
Raj is in our chat room, and he says, and he's in Canada. I don't know why that almost came out of my mouth. Probably because it's 5 o'clock in the morning. He said, real estate market here is nuts. Eric says housing prices, both rent and buying, are nuts in Toronto and area. And I know Raj is in Toronto as well. Angela says, if Chinese real estate investors in Canada dry up, then there will be a problem for sure. Yeah, that's a problem here in the US too. Raj says prices have fallen around 12 to 15%. That's nothing, buddy. That is nothing, unfortunately. Angela says, my friend in Vancouver Island says they're mainly responsible for elevated market. Yeah, and in BC and Victoria, yeah, all, like if you've ever been to Western Canadian cities like Victoria or Vancouver, it's all well, I don't say it's all, I mean there's just a lot of Asian influence there from an investor standpoint, but really interesting. I think the loonie is going to be quite crazy today, so I think you got to manage risk carefully. We can obviously see the 135 level is pretty big support, and if we do take out the stops at 135, I would imagine this is like an elevator shaft in the market. So just like you can call it a vacuum, you can call it an elevator, you can call it whatever you want. So Stelios, are you here?
Yes, sir.
How jealous are you that you're here, or you're there and Steve is here?
And Steve is waking up at 3 a.m. Yeah,
yes.
I'm not jealous. I'm okay. It's been a busy few days, really busy,
Steve, how
but
you
I'm
faring?
okay.
Blake,
You should have seen where he was this morning, Blake. He was in the arcade playing arcade machines.
Yeah, I was with my kids and I had 3 laptops with me, literally 3, and they were playing and I was working. So very nice.
Was that an arcade or a casino? I could have sworn it was a casino, buddy.
Yeah. Yeah.
Blake wants
You
to
look
take
like
me
we're into the game though.
Blake wants to take me to an Indian casino. He's been trying to sell it to me since we landed. Actually, he's like, "Oh, look at that building." You know, it's. But no, we're going Vegas.
Yeah, we're going to be going to Vegas, but you know, very close to me, as Steve has noted. There's a really nice casino on the Indian reservation called Talking Stick, and it happens to be very close to where I live. But anyway, we will be in Las Vegas, and we will take pictures, and you guys will all get to see them. So hey, you know, Dale, we got a couple minutes. Microsoft got crushed overnight with earnings.
Okay.
I was actually just pulling up the chart just so you guys can see it. These are long-term you know, drawings that we've had in Microsoft. You can see, you know, that the head and shoulder pattern still points, you know, towards 200. We're gapping down to 234. You know, this is scary. You know, you look at, you know, companies like Microsoft, there's still some downside there. You know, this is the COVID breakout. We could probably revisit that, you know, and that looks very similar to, like, you know, the S&P eventually making it to 3,400, right?
Could, but I think the MAGA fan game is dead, and the market there'll be new leadership and rotation.
In weed stocks. Weed stocks. Everybody's going to get stoned.
No, seriously, different leadership. You know, the oils are still acting good.
Yeah.
Housing looks like it could come out of here if there's some. So basically, you know, let's say this: the old game is dead, and there'll be new leaders, and they will be laggards, and people will be buying them forever, thinking they're going to revert to the way they used to trade. But it's a different game now.
It is.
Speaking of which,
like keep an open mind and you'll keep your account open.
Speaking of which, Dale, we've had a very interesting conversation with Tavi Costa in the last interview of the event, where we actually talked about this. I mean, the rotation that we're going to be seeing, and in his opinion, and I agree with him, it's going to be a lot more prolonged than people expect. Exactly what you just said.
Okay. Well,
from quote unquote growth stocks, right,
yeah,
to value.
Yeah.
And commodities.
Yeah. Yeah, things you could drop on your foot.
Yeah.
And it hurts. Well, you sound tired.
like Stelios's stash of silver would actually crush you like a peon. It'd be like a little ant.
He bench presses his silver.
He does.
He puts silver coin bags on a bar.
Boobs, man boobs.
No,
is that
really?
No, that's from overeating. Sorry.
You do that? You do curls with silver coin bags.
Stelios, I'm joking, man.
Hey, I know.
Wait, hold on.
If anything happens and Stelios's address gets out there, something tells me he's going to have, armed people showing up at his door after so many webinars of us having fun with him and his precious metals.
Oh yeah, we shouldn't. Yeah, we shouldn't say it's all buried in the backyard, huh?
Yes.
All right, guys, I'm swinging around my microphone like crazy in my office. It's not made for actually two people, but I know you have Larry Tantarelli here, who's always a great guest, especially, when you're focused on, earnings season. Dale's brought in a great guest for this moment. Just remember, if you are with ForexAnalytix, we will be broadcasting
4 months ago.
What's that?
I planned for him to be here during this earnings season.
Then we're going to call that luck. All right. And and I want to say that that if you're in the ForexAnalytix community, we're going to be joining you for the morning edge in about 45 minutes. If you guys haven't checked out the trader funding program, we have a lot of people that have actually, following the event, they're starting up their assessments. If you want to learn how to trade our money and not risk your own money, but make 75% of the returns, you have an unlimited time to make 10% in a demo account without losing more than 5%. And on a trailing basis, and you're in a demo account. That's it. And you want to learn how to be part of ForexAnalytix and have a lot of trade ideas, in our community. Check it out, Trader Funding Program. Dale, Stelios, Kman, and especially you, Ryan. Good to hear from you guys this morning. I'm going to pass it over to you, Dale, and Steve and I are going to be out. We'll see you guys on the morning edge shortly.
Bye-bye, everyone.
Cheers,
Right. Yeah, enjoy, guys. And Kman, Ryan, thank you very much. Stel, working its butt off, multitasking while everyone's having fun. Thanks for keeping it all together, Stel. Larry Tantarelli.
Dale, good morning.
How are you, buddy? Good to have
my
you
friend.
back.
How are you?
Doing okay. So, we had some interesting action the last couple of weeks. Wondering what's on your radar. If you, like a lot of people are, some people were looking for a relief rally. Do you think that's all it is, Larry?
I think we're definitely in a bear market rally. I think it's got the potential to turn into more, but right now, the way that I'm treating it is as a bear market rally. And then if it grows into more, that's great. But I've definitely been buying it and increasing my long side.
Okay, let's see your screen and what you're allocating funds to. We were having a discussion here that, Microsoft had bad earnings and that the old game of MAG and FANG is done. And there's going to be new leadership, even in a bear market rally. Those aren't going to be the ones that outperform like they used to. Does that resonate with you?
Yes, I agree with that. So, you can see my screen, right?
Yeah, got it up here, buddy.
So the first thing what's driving the markets right now is bond yields and the US dollar.
Yeah.
So what happens with bonds and what happens with US dollar determines everything else in the markets right now. So if you take a look at this chart, this is 10-year treasury yields is the red and black hash mark. And then the solid black line is the S&P 500 overlay. So you can see it's been simple. Yields broke out the beginning of the year. Stocks went down. They had a little bit of a top in June. Markets put in a low. Yields turned higher. S&P went lower. Now on Friday was a big day.
The world changed.
Yeah, the Fed, they didn't make a pivot. but I think they saw something in the FX market with the dollar yen that
They wanted
scared
to help
them.
BOJ out.
Yeah. Yeah. So you see yields were 433 Friday morning. Wall Street Journal put out that softball article, and then I think they closed down about 10 basis points that day. Since then, 433, 406, and the S&P's up 200 points in 3 days. So what happens here is going to determine, for the most part, what happens here. Earnings in the short term, you'll see some volatility today with Microsoft, but what happens with bond yields drives the market right now.
Can I ask you a hypothetical? I know it's really not your style. You
Sure.
trade what's in front of you, but
Yeah.
say, for example, we trade under 3.5 and we head down towards the 3% level. What do you
On
think
bond
that
yields?
would? Yeah, 10-year gets down to 3%. Where would
Oh,
that
yeah.
take S&Ps?
It depends how fast it happens and why it happens. So if it happens quickly because some really weak CPI numbers or inflation numbers come out,
Yeah.
then I think S&P goes straight up. If it takes a little bit longer and it's due to a softer economy or a slowdown, I think it still helps the S&P, but not as fast as if it's caused by inflation dropping.
Great point. That's a pearl. So it's not that it drops, it's for what reason it drops.
Right.
So really nice differentiation there, Larry.
Yeah, thank you. So if we get, I look at this inflation number every single day from the Cleveland Fed, and they're still up at like 8.14 or 8.11 right now. If for some reason those inflation numbers come down a lot and you see bond yields drop sharply, I think S&P goes straight up. But I still think it's going to be choppy in the near term. I do agree that I don't think FANG is going to lead us out of it. I don't think Microsoft, Google, maybe Apple, that's been holding up a little bit better. But, the energy stocks, the materials.
Still look great.
Yeah, the material stocks. So if we dial up energy, I'm going to take this off my screen for a second. So if we dial up XLE, now XLE's been choppy with crude oil, but there's a big difference between the energy sector stocks, which I think, based on the way that they've set up their cost structure, I think as long as crude oil is over about 45 to 55, they're making money.
I'm looking for 108.
In crude?
Yeah, WTI.
Yeah, 108 and WTI, I think would send these stocks much higher. I like Occidental right here.
Yeah.
Very nice wide base, 2050 SMA cross. Looks like it's ready to break out higher. ExxonMobil, just the whole group in energy. I think what happened with WTI is when OPEC had that 2 million barrel per day supply cut, I think that was right about here. I think they really put a floor in the crude oil market, and they put shorts on notice that at any time, they can just pull back on supply, and you get that big short rally.
And that Biden dump, that last dump, was the low that you have there at 81.30. We were talking about here in F.A.C.E to fade Biden on the SPR release.
Anyway. I had been bearish on crude oil through here because I figured that all this central bank tightening, would put pressure on it. And I've got some longer dated December USO puts, small position, but I really think that OPEC put a floor in here, and I think that helps the energy stocks quite a bit.
Yeah. What else are you buying in here, Larry?
I like these material stocks. So if we take a look at the
Freeport?
metals, Freeport. I put Freeport on our list a couple days ago.
That
Freeport, really nice wide base down here.
Yeah.
Reported earnings, a lot of volume came in last week after earnings, and I use the moving averages a lot. And when I see something like this, where this 100-day moving average has put a top on Freeport since April, and then you get a high volume move through it, I think that chart set up very, very well,
36.
right where it is.
Yeah,
I like that. Tech Resources is always a favorite.
What do they do?
Tech Resources, they're out of Canada. They're in the metals and mining business.
Okay. They
So they
sell the
do-
picks and shovels and
No, they
the
actually do
miners?
the mining. They do
Oh.
the mining themselves. They're a miner, but they're
Okay.
into, you know, they mine everything, whether it's coal or gold or steel, whatever it is. But very,
that chart.
very nice chart.
okay.
XME for the, I've got a position here in the ETF space. And what I do around earnings, because you've got about 420 large caps reporting earnings in the next 2 weeks.
Yeah.
Around earnings, often I'll focus a little bit more on the ETFs just so you don't get that, you know, 10% shakeout. But XME, I think CF Industries looks great.
Yeah.
They're in fertilizer. So you're seeing a lot
Okay,
of these.
Yeah. Commodities come back.
Yeah, a lot of these material stocks, Corteva is in the same business. That's got a nice uptrend. In the industrials, Deere.
I saw Cameco got hammered, but and it's recovered. Anything in the uranium stocks besides, you know, what was
You
that,
know,
an earnings miss?
I don't do anything with the uranium stocks. You know what it is they're really difficult on my stops.
Okay. Yeah, because they're thin.
Yeah, if you look
Yeah.
at a chart like that, it you know, it can
Yeah.
be
Not enough liquidity for the, yeah, I
it,
mean,
it can just be hit or miss. The same thing with the coal stocks. So AMR, that's got a very nice trend that's working right now. So I really think, you know, based on what I'm still seeing, materials, energy, the commodities, some of the healthcare stocks have been super strong.
they've been going up all along. They've held, that was like a defensive thing for people,
Yeah,
right?
yeah, they're
And they're getting better.
well, you know what it is? They're defensive, but they've got some earnings growth as well, because even if we go into a recession, you know, healthcare, people don't really dial back on healthcare because the economy is bad.
Okay.
You know,
Go ahead.
no, I was going to say that, you know, they might not buy a new car, but
Yeah.
you know, if somebody has to go to the hospital, they're going to go to the hospital and get their prescriptions.
A lot of they're talking a little bit about some type of credit crisis. People are walking away from their cars. You know, that they, you know, the way they were selling them to people, there were a lot of people that had $1,000, $1,200, $1,300 monthly payments for their car.
Yeah.
You know, so you know, between your car and your house, so you know, that was equal to what their mortgage payment was if they were locked in under 3%.
Oh,
So
sure.
so much for the car market being tight.
Yeah, you know, I'm not a fan of anything right now that has to do with consumer finance, and especially not subprime consumer finance, because I think, you know, we'll definitely get an economic slowdown. I'm not going to try to call a recession or not, because that's not what I do. But you know, higher inflation, higher food prices, higher gas, and higher interest rates is going to put the squeeze on, you know, a lot of people. And I just think that anything that has to do with consumer finance, especially subprime, you know, I got to tell you what, I don't like the home construction group, but I've got to say this.
Yeah, I was talking about that earlier, that the home builders look like they're coming out of the hole.
You know, they do. And I think, and that surprises me.
Everyone's so bearish on real estate, and it's really a play on yields here.
It's exactly a play on yields. And I think part of what's holding up the real estate market is the same thing that's holding up inflation. Is, you know, rent is 33%, I believe, of CPI. Yeah. And with everybody working from home, you know, my wife and I both work from home, and that changed after COVID. And I know a lot of people that work from home, and a lot of these Fortune 500 companies, they were going to bring people back, and they had to, you know, cave in and dial it back. And I think that's why the real estate market's held up, is a lot of people still work from home.
Yeah. Yeah, I sometimes I don't know what bathrobe to wear.
Yeah.
Oh,
Now I will say this. In tech, I do think that the new leaders won't be the old leaders. So, Microsoft, Google, Amazon, Apple, they're not going to go away. But if
what
you
does
take a look-
Roblox do? I know a guy I work with. He's long this stock. What do they do?
Well, they're big, so they're into online gaming. But what their big angle is they're like the first mover in this whole metaverse industry shift.
Okay, yeah.
And they've got big corporate partnerships with Nike, I think with Pepsi. And if you take a look at that chart, so I put this on our buy list this weekend because last week it reclaimed the 40-week moving average for the first time going back to January. It closed over the 200-day yesterday, and they guided higher for the coming quarter, so it had a really high volume move. But
left
if you
a gap and didn't even fill it, did it?
Yeah, it didn't fill it. But if you look at all the high volume bars that are on the screen, right?
Yeah.
This stock, you've got, Google and Microsoft, they recently made new lows and the semiconductors are down here. This stock is up quite a bit. And that I think that's going to be one of your new leaders in tech.
How many positions do you have on, Larry, in different issues?
Right now, I'm very small right now. I've got 4 open long positions. And I've got some S&P 500 puts and some crude oil puts to cover me in case things get bad into December. Okay. But I'm pretty small right now. I've only got 4 open long positions.
Okay. Some great looking charts. We were talking about consumer debt. What about corporate debt? I mean, these guys borrowed heavy a couple of years ago when rates were low. And they used it for financial engineering, nothing for, as far as new facilities or invest in the business. It was invest in the stock market because that's how they get paid. And when they have to roll that, it's going to be like triple of what their finance costs were. I know LQD and junk held up better than treasuries, which I found kind of amazing, and kind of a shift that the flight to quality is no longer treasuries. It's, HYG and LQD. They held up much better than treasuries. Yeah. Oh, you have an island yesterday in TLT.
Yeah.
But what do you think? They're going to have problems rolling debt. Someone told me that most of it's not going to have to roll for a couple of years. But that's going to be a bridge too far for people that, especially if we're in a recession. There could be a lot of solvency issues down the road there.
I don't follow the bond market too closely, but I do think you're right. I think that, I think your AAA rated companies and your, companies that have a ton of capital and they just borrowed money because money was so cheap, I think they'll be fine. But when you get into these, these junk rated companies or companies that are highly levered, if they need to roll that debt to keep things going, then yeah, they could feel the squeeze.
Okay. We still have some time if you want to show us anything else. We've had some great looks from you, Larry.
Yeah, thank you. Couple other charts. So the first thing, going back to bond yields are in a really strong breakout move. Obviously, I was surprised to see. I thought 4% might have been the top. It failed here, but they've held that 20-day, and 4% is the first level, and then 380 is the second level. That I think we need to get below that. I think if bond yields stay over 4%, then I think it's still a little bit of tug and war for the S&P 500. Now the S&P, I do think that this reversal that we got, that was October 13. We all know that high volume reversal bar. So I think this was a real reversal. That CPI number came out. I had some shorts that I covered into that gap down. I'm sure there was a lot of people, that covered some shorts. But in the meantime, I do think this is a real reversal. As far as if this, turns into just a bear market rally and we get up, maybe to the 200-day, maybe to 4,100, somewhere in there.
Yeah.
If we get there, we need to get past this 50-day. So it makes sense. The S&P
We'll
is
get
going to
there.
back off today. And then if it just comes down to really how the economic news comes in. I don't want to try to predict it. I do think that there's, some stuff in the economy that we need to work through. But at the end of the day, I don't want to predict. I will say that I think this is a buyable low right here. How long it lasts for, I don't know. So I've been smaller. I've been making some buys basically every single day, but it's been smaller. I'm just scaling in, trying to get into some pullbacks. But yes, I think we've got a rally. We'll just have to see how long it goes for.
I've noticed there still were plenty of hedge fund shorts. Goldman underinvested. A lot of the really retail liquidations, I think, were pretty heavy in the last month. So I think a lot of people are worried about earnings, and they're going to be left in the dust on the sidelines here, buddy.
Yeah, I put out this report, and I'll drop this link in the chat for people. So I put out this report and video on Monday, and right now, according to Bank of America, their global fund manager survey, fund managers are the highest amount of cash they've had in the past 21 years. And you can see they're heavy overweight cash and they're heavy underweight stocks. So what happens is, you get into this year-end performance chasing.
Right.
If we get the seasonal rally and then they just have to buy because everything. So I think there's a lot of firepower that's on the sidelines in the near term.
Larry Tentarelli, firepower for people that follow his work. That gives them firepower. So Larry could follow him at LMT978 on Twitter, and he just provided a link. And Larry, you're one of the better ones out there. And every time you come on, you give us actionable ideas instead of, well, this could happen, but if it does, then that would happen. And if it doesn't, then it won't. That kind of analysis, you hear it on CNBC a lot, but
hey, they gotta hedge their bets. But I think I'd like to see. Listen, it's been a tough year. Unless you've been short all year, it's been a tough year for a lot of people.
It hasn't been easy to do that either.
No, it's not. Listen, this year, Dale, I've been at this since 1998. This is the toughest year since 2008 because these moves, just one way to the other are vicious. But maybe we get, a little year-end rally to, pick things up a little bit.
Yeah. Someone just said, Larry, you're not your average two-handed economist.
Thank you.
And if you could post it one more time, Larry, before you say goodbye, someone's looking for the link, and hope you get some action.
Yeah, I put it in the chat box if people see the chat box, but all they have to do, just go to my website, bluechipdaily.com. And I've got it right there on the website. And what I'll do is I'm gonna put it in my Twitter profile as well, so people can see it there. But a lot of good stuff that's in that report. It took me about a week to put it together, but I think there's a lot that will help people.
Thank you so much, Larry, and for the offer and edifying the F.A.C.E community. My trading warrior brother, hope you have a great fall trading season, and talk to you down the road.
Dale, you too, my friend. Thank you for having me on, and I hope that everyone has a great holiday season as well.
All right. Larry Tentarelli, everybody, at LMT 978. And you could join the team in about, 19 minutes. Larry, everyone's thanking you. And for the morning edge. So everyone, let's see, today is Wednesday. See everyone tomorrow. for Thursday. Anyway, thank you guys. Don't forget to try our trial and join our community. Blake and Steve won't be on vacation forever. And you know what? You go in that chat room right now, even when they're in Vegas, you're going to find people to support you and help you become better. And you have to surround yourself with traders better than yourself to get better. So definitely check out ForexAnalytix community for that. Okay, Michael, Richard, everyone, don't just count your pips, count your blessings. See you tomorrow. Adios.